If you've been with me for a while, you probably already know that I use the retirement 3-bucket strategy. I'm a bit of a worrier, and it's the strategy that allows me to sleep at night. The bucket strategy provides income, but allows you to ride out market downturns without having to sell your investments at a loss. It separates your funds into buckets on paper. Each bucket has a specific purpose depending on when you need the money. The real value of the bucket strategy is the insurance policy against market downturns and other emergencies. I've seen where some people just use 2 buckets, and I kind of like this. It seems simpler to me. Right now, my investments are all over the place. I have funds invested at 6 different financial institutions. While that is diversified, it's a little more complicated to keep track of. I decided since I'm retired now, I kind of want to simplify my plan. I like the idea of 2 buckets. Bucket number 1 can be no risk, and bucket number 2 can be some risk. I've already started the process of rolling my 401A over to an IRA. In the next 6 months or so, I'd also like to roll my 403B and my 457 deferred compensation plan into that IRA. I also want to get out of my I bonds. When I first invested in 2022, they were making over 9%, but now they're only making about 3%. So I would like to move that money. I'd also like to move my mutual funds brokerage account. This was all after-tax money that I invested, and there seems to be tax issues with it each year. I'd rather move this money into my Roth or my high-yield savings account or both, since it's all after-tax money. Here's what my 3 buckets looks like now. So if I rolled all of my accounts over, here's what my new bucket number 1 would look like. I would just have my high-yield savings account and my IRA CDs. This is my no-risk money. These accounts are protected by the FDIC and the NCUA. I've been happy with both of these accounts so far, but if the interest rates go down, and they might, then I may end up moving this money too. Then in my new bucket 2, I would have my traditional IRAs and my Roth IRA. These have some risk, but we need some risk to outpace inflation. So when I first started looking at it, I thought I'd keep the same amount of money that I have in my bucket number 1 and add in my IRA CDs. That came out to about $200,000 in bucket 1 and $354,000 in bucket 2. And this is as of the beginning of October 2025. If bucket number 1 continues to make around 4% and bucket 2 continues to make around 8%, this turns out to only about 6.5% gains for both buckets combined. I want to be closer to 7%, and I know there's no way to predict what kind of gains you're going to get. This is just based on how they've been performing so far. Also, having $200,000 in bucket 1 is enough money for me to live on for over 12 years when you include my other sources of income. I have an $800 a month pension, I make some money from YouTube, and eventually I'll have Social Security. So if I rolled $30,000 from new bucket 1 to new bucket 2, then I'd have about 10 years worth of cash in bucket 1. And my total gains for both buckets would be closer to 6.7%. Then I looked at, what if I moved $50,000 from bucket 1 to bucket 2? Then I'd still have close to 9 years worth of cash, but I'd be a lot closer to that 7%. I've always said I wanted 3 to 4 years worth of cash in bucket number 1 in case of a market downturn. Joe Kuhn, and I just love his channel, recently said that he has 10 years worth of cash. The way I have had my original buckets laid out, I had 3 to 4 years worth of cash in bucket 1, but my IRA CDs, which I had in bucket 2, have no risk, and I really think they belong in bucket number 1. So I've really had over 10 years worth of cash all this time. I know this allocation is way too conservative for some people, but it's what makes me feel comfortable and able to sleep at night. If I move $50,000 from my new bucket number 1 to my new bucket number 2, I'll actually be more aggressive than I have been. My portfolio has been steadily growing since I retired, but I know this won't happen every year. There will be years with market crashes and corrections. Unfortunately, that's just how it goes. It will take a little while for me to get these accounts rolled over and reallocated. I'm thinking maybe 6 months or so. My 401A rollover won't be completed until November, and my IRA CDs mature in March, so I can't move those before then. I'll also have to take a look at the IRA CD rates in March to decide if I'm going to put some or all of that money back into CDs. And I'm not sure if my buckets will turn out exactly like this. This is just a rough plan. If a market crash happens during this restructuring period for me, I'll probably have to put some of it on hold. It would be a good time for me to move money from bucket 1 to bucket 2 because I'd be buying low. But I would personally be hesitant to roll over investments in bucket 2 during a downturn. That's just my nervous Nelly self. This will be a big change for me. I wanted to share my plan with you before I got very far into it. I'd love to hear your thoughts. My buckets are also going to look different, so I wanted to give you a heads up. Now I'm going to share the funds I've been looking into to invest in for my new IRA. In November, those funds will be rolled over and I'll have to choose funds to invest in. I started researching the funds, and these are the ones that I'm interested in. I'm not sure which ones I'm going to go with yet. Rob Berger, in one of his videos, shared a website where you can compare the growth that these funds make. It's called Testfolio. I'll link it in the description in case you haven't seen it. So I'm going to read the name of the funds because there's no way I can memorize all of these. There's SCHD, VTI, VU, FCNTX, FXAIX, VTIAX, VBTLX, VSMGX, and good old FTSAX. So these are the tickers I put in on that website because these are the ones I've been looking at. But please remember, I am not a financial advisor and I am not giving financial advice. Here's the compound annual growth rate for each of these over the last 14 years. You can change the date range and do all kinds of analysis on this website. The highest out of the ones I was looking at was FCNTX. But it also has the highest volatility rating, which makes sense. The lowest growth rate was VBTLX. It's a bond fund. I'm honestly kind of over bonds. I feel like I could get better growth with my high yield savings accounts and my IRA CDs, at least right now. VU looks interesting to me. You hear people talking about that one a lot. It has pretty good growth rates and is not quite as volatile as some of the others. VU has only been around since 2010 though. VTSAX has been around since 2000. So it has 10 more years of history to look at. The other thing I like to look at is the risk rating. VTSAX and VU both have a risk rating of 4 out of 5, and they're all stocks. So I could invest part of my money in those and keep more in my IRA CDs and my high yield savings. Or I could choose something like VSMGX. It has a mix of stocks and bonds and is less risky. Its risk rating is 3 out of 5, and if I did something like this, I could move more money out of new bucket 1 to new bucket 2. I still have some time to figure this out. What funds do you guys like? Feel free to share. I love reading what you guys think. Do you use the bucket strategy? If so, do you use 2 or 3 buckets? If you want to share, feel free to leave a comment. If you're seeing me for the first time, hi, I'm Julie and this channel's Happy on Monday. Thanks for joining me. If you found this helpful, please like. And if you're interested in retiring early, consider subscribing. I'm going to leave you with a quote. Life is about accepting the challenges along the way, choosing to keep moving forward and savoring the journey. Hope to see you again soon.